Hi, I am Ashwin Ramni here from Derivative Trading Academy. So in the previous video, we spoke about a hammer pattern, wherein we look at a hammer pattern after a downtrend, which has a very small body but a pretty long lower wick, which signifies bullishness. And in the other video, we also spoke about an inverted hammer, which is also called as a shooting star, which we see after an uptrend. Again, it has a long upper wick but a small square-like body at the bottom, which indicates bearishness. Now, in this video, I'm going to talk about my personal favorite candlestick pattern, something that I absolutely love trading these patterns if I get it, near my support as well as resistance zones. So the pattern I'm talking about is called as your bullish engulfing pattern. Engulfing, it's engulfing. Now engulfing means, it covers something. So think of, there's a red candle and there's a green candle. So both the candles has bodies as well as upper wicks and lower wicks. Now in hammer and inverted hammer, the focus was on the wicks more. So the wicks, for an inverted hammer has to be high. The wicks for a hammer had to be pretty long on the lower side. But when I'm talking about engulfing, we are not stressing much on the wicks here. In fact, we don't look at the wicks at all. What we see here is we do a body to body comparison. That means if a green body after a downtrend, if a green body completely covers the red body, so you have a red body here and there is one green body here, it completely covers this red body totally, it engulfs, it covers, it shadows the red body, then that pattern, it's a two candlestick pattern. Like hammer and inverted hammer were one candle pattern, but an engulfing is a two candle pattern where the green one should completely cover the red one, and again you should be seeing it after a downtrend. So you see the price going down, you see a bullish engulfing, green covering the red, which indicates now the buyers have overpowered the sellers, the buyers are more than the sellers, and there can be some bullishness in the market. Now let me try to explain you this bullish candlestick pattern, which is your bullish engulfing, with the help of an example on Bank Nifty 15 minutes time frame. So I just take different charts with different time frames, so that you get a hang of how do you look for these patterns with near your support and resistance zones. Now you can see Nifty Bank 15 minutes chart. I particularly want you all to focus on these two candles here. Forget about the wicks for now, since like I mentioned in engulfing, you do a body to body comparison. The green body, the second candle should be a green candle, but the first candle has to be a red one. The green body should completely engulf or cover the body of red here. So you can see a green candle here, a green body has completely engulfed the body of red, and this was after a downtrend. So your sellers were active, they were trying to push the price down, and now suddenly the buyers have come in. And also what you have to see is, like I mentioned, you don't see this in isolation, you see along with your previous swing low. So there you got a bounce here on 12th of July at 115. The price went up, it again fell back here to this zone, and the buyers came in at the demand zone here. Like I see a two candle pattern here, and I could see a bullish engulfing, which means that zone, this zone is acting as my support zone. And since I got a bullish engulfing here, I can expect some bullishness in the coming days. So very common, you will probably see this candle occurring a lot in Nifty, Bank Nifty. You open any time frame, even stocks for that matter. It's a brilliant pattern. It's my personal favorite. Like I mentioned, I absolutely love trading engulfing patterns. But I hope you got a clarity on what a bullish engulfing is. Like, just to sum it up, you see it near the support zone or the demand zone. The green body should completely cover the red body. Remember, it can't be red and red. Neither the second candle can be red and the first be green. The second has to be green. That means the buyers are more than the sellers, and the first has to be red, and it has to be after a downtrend. It can't be after an uptrend. So I hope bullish engulfing was great. What you can also do is you can just open any chart that you want to, open any time frame that you want to, and look and try spotting these candlestick patterns. And trust me, it'll be fun. And also don't forget to check our website, which is www.derivativetradingacademy.com. We do a lot of webinars wherein we educate people on options, technical analysis, derivative analysis, option strategies. So, we also teach you how do you build a trading system from the scratch, looking at the swing lows, swing highs, candle patterns, option strategies, etc. You can definitely check out our webinars, and also you can have a look at our website. Until then, I'll be coming up with a new video on a different candlestick pattern. Till then, take care and stay safe, guys. Bye.